Everybody needs to be prepared for what may happen this week and next week. This video is not about fear. This video is not about clickbaiting to get you into a panic or fear mongering, things of that nature. Look, at the end of the day, I'm not doing anything with my investments. I'm keeping them put. I'm not selling anything. But I need you all to be aware of what may be coming up this week and not to have blinders on about potential risks. So that's what we're going to talk about today. And then we're going to end it with some potential silver linings and maybe a light at the end of the tunnel in the midst of all this travesty that we see in the world, okay? There may be a beacon of light that we can look towards to see when we're going to get out of this. Welcome back, everybody. If you're new, my name's Nicholas, and this is Investing Against the Grain. So what am I talking about when I say we need to be prepared? Well, at the close of Friday, Tesla essentially went down about 15% in 1 week. Okay, now if you aren't invested in Tesla, you may be invested in some other stocks. And this message still is applicable to you because right now we're in a very weird place with the stock market, with the world, with macro, everything. It's a very tense time we're in, and it only seems to be getting more and more tense. And when things get to this very tense place, all it takes is one thing to happen and the whole thing can explode. So we need to be prepared for what may happen in the next 2 weeks. The next 2 weeks could determine the next couple of years. So let's start off with talking about what's going to happen on Thursday. On Thursday, we get the CPI reading, Consumer Price Index. Now, this is a measure for inflation with the economy. All right. So what happened last month was we got a higher CPI reading than what we had expected. All right, we expected, I believe it was 8.1, we got 8.3, but in reality, it was still down from the 8.5 we saw the previous month. So we were headed in the right direction, but it missed analysts' expectations for a lower CPI. Why was that a big deal? Well, because as long as we stay at these elevated levels, and as long as we don't come down faster and faster, well, then that gives the Fed the confidence to continue doing what they're doing as if it's an indication that they are right in what they're doing. Now, Thursday, we get CPI readings. I believe right now the expectation is for a reading of 8.1%. All right, so 8.1%, that's the watermark. Now, anything below that, it's great. That's great news. That will essentially take a little bit of air out of all this tension we have in the macro in the entire world right now. But if we get a 8.1 or higher, I think we can see further sell-off that we've seen in the last week. All right, so just keep that in mind. And why is it so important? Well, it's so important because I know a lot of you have margin. A lot of you are on the verge of getting margin calls. So be prepared. Don't just go ahead and throw in a whole bunch of your cash that and none of this financial advice, but this is just my thought, my 2 cents. I would not be taking a whole bunch of money out of my checking account that I need for my day-to-day bills that I can't afford to lose and putting it into my brokerage account just to meet any kind of margin deficit, because that can keep going lower and lower and lower and leave you screwed. So be careful. You need to understand where you're at, deal with your margin however you need to, but just make sure at the end of the day, you can still put food on the table and you can still keep that roof over your house. Sometimes taking a loss, sometimes having to sell is what you have to do. But again, I don't know your scenario. I don't know your situation. All I know is a lot of people are on this verge of getting called or have already been margin called. I'm just throwing out a warning about what could happen Thursday. Thursday is a flip of a coin. We don't know which way it's going to go. We still have not seen any of the interest rate hikes effects come through the economy. And how do I know this? How do I know this is true? Well, one, because we see housing collapsing left and right. Prices are coming down. Mortgage applications are just falling, cratering. Two, we see all of these commodity supplies just cratering down. And then number three, we're starting to see in the used cars prices, right? We're starting to see that come down very drastically. So there's a lot going on in the economy to show that it is slowing down meaningfully. However, we still have not seen any of those effects into the CPI numbers, the PPI numbers, the PCE numbers. We haven't seen any of that roll into it. So until that happens, we live in this place where the Fed is going to keep moving higher and higher and higher, and they're not going to have any sense of when to pause, right? Right now, they're saying that they're going to pause at 4.25% potentially. 4.25% on the Fed's fund rate. But we don't know if that's true, right? They may think that they need to go even higher and even harder, but I don't think that's going to be the case. I don't think they're going to have to do that. I am of the belief, and maybe this is just hopium, that we will see a definitive sign that inflation is coming down, that things are under the control before year end. Or we will start to see something really crack like we saw over in England, okay? We might see something like that in the States. We might see something like that in another country that really starts to put pressure on the Fed to chill out. Because whatever the Fed does, it has an effect on the global economy. So they have to be mindful of that. Right now, they're driving literally just through looking at the rearview mirror, which is not healthy, and it's really scary to see that happening. Because eventually, if you're only looking through the rearview mirror, you're going to crash because you're not seeing what's happening straight ahead of you. And what's happening ahead of us is we're seeing all these very obvious signs of the economy slowing down. Now, you might have seen this jobs number that came out Friday, and everybody is saying that, oh, it's such a bad number, and that's why everything went down. Well, actually, it wasn't the number, right? The number actually came in below estimates, which in a perverse world that we live in now, where this bad news is good news, the problem, the reason we had the sell-off was because the unemployment rate ticked down to 3.5%. Which means even though we had less jobs than we expected, which would have been the good news, right? We saw unemployment tick down. And that just tells the Fed that they have even more work to do. But that may not be true, okay? There's just this, I feel like there's this big lag effect, this big whiplash effect that they just do not want to see. It's almost as if they are just so terrified of of having the Volcker economy all over again, that they want to just put their foot on the throat of the world economy, and they don't care about the consequences as long as they're not the ones that created this hyperinflation scenario. All right, so we talked about CPI, we talked about inflation. We'll talk about Tesla in a second here, but next let's talk about what's happening with Russia and Ukraine. Okay, this is a very hot button topic right now. I'm aware of that. So I'm going to tread very lightly with my words here because I'm not trying to create any kind of controversy. I'm not trying to say what should or shouldn't happen. What I need you to be aware of is the risk of a further escalation. Right now what's happening, and you can think this is good, you can think it's bad. I don't really care at this point. But what's happening right now is the Ukrainian people are taking over. They are winning. They're pushing the Russians back. They just blew up the bridge that goes between Russia and Crimea. So essentially the only way they can get supplies across. They just destroyed that, which, militarily is a very good win. But what does this do? Well, this puts further pressure on Putin. And so the more pressure Putin has, the more he might be backed into a corner. I feel like he has no other choice than go the nuclear option. Now, I hate to say that he won't do this. And I've heard a lot of YouTubers say that, oh, Putin would never use nuclear weapons, whatever. He's not that crazy. He wouldn't do it. It would make no sense. The whole world would be against him. But I don't know. Everybody was also saying that about them actually invading Ukraine. I saw a lot of people, and I don't know if you remember this, was back in February, a lot of people were saying, oh, well, they're just threatening to go in. They're just trying to put pressure on them not to join NATO. They're trying to scare them. It's a tactic. Putin's just a bully. And next thing, what happens? Well, Putin comes out, makes a crazy speech, and he goes ahead and invades Ukraine. So don't underestimate this man. If he's threatening it, that means he can do it, and it means he is likely to not have any kind of reservations about doing it. Now, this is also where I hear a lot of people say, okay, cool. If he does that, the whole world's going to turn on him. I don't know how true that is. I really don't. You would hope that's the case. You would hope that in 2022, in information age, anybody who uses a nuclear weapon, that we would all rally against them, while at the same time being aware that the United States is the only country to ever actually use nuclear weapons. 2 of them, actually, in 2 different scenarios, Hiroshima and Nagasaki. But with that said, you would hope that the world would ally together. That means China, that means Iran, that means India. But I don't know how likely that is. I think there's also a lot of hate towards the West, that they may be more so on the same thought process that they have right now, where they're just going to stay on the sideline. and they're not going to actually do anything. They're not going to push back. I don't know. The point is, we don't know what's going on there. The point is, don't underestimate President Putin. And the point is, be ready, because we don't know what could happen. So make sure, especially in these trying times, that you are prepared to deal with any kind of crazy scenario like that. All right. The third thing I want to warn you about, and I need you to be prepared for, is a potential bad earnings from Tesla. Now, what do I mean by that? Look, I think the numbers are going to be great. I think the numbers are going to beat. I think that the numbers are going to be either at what analysts expected or above, even though they are, quote unquote, 20,000 vehicles shy of expectations. Again, I don't really care about deliveries. I care about production. But at the end of the day, for the balance sheet, for the earnings, all that actually gets presented are deliveries. So we're looking at 340,000 vehicles delivered, 342, whatever the number was. So that's what the financials are going to be based off of. Now, analysts had other expectations. So we'll have to see how those numbers align. With that said, there is a potential, even if they beat, that the words that are said, the message that's given during the earnings call could send the stock tumbling. So this is yet the third thing I want you to be prepared for. Don't hop onto that earnings call thinking it's all going to be, roses and sunshine, roses and butterfly, whatever that phrase is. Don't expect it to be nothing but good news. Here are a couple of things that could send things off to a left field, or it could be really bad for the next day. If they say that there is a China demand problem, that would be very bad. If they said that something was going on with the ramp, that in Austin and Berlin, that's going to go slower than expected, that would be bad. If they said that there's an issue with the 4680 batteries, that would be an issue, right? Anything of that nature will not be good for Tesla, will not be good for Tesla the next day after earnings. In general, the next day tends not to be good. So we don't need anything to fan the flames of bad news with Tesla. Right? The rest of the media, the rest of the world does enough of that for Tesla. Tesla doesn't need to add any more to it. All right, so those are the things I need you to be prepared for. Okay, but let's take a step back. Let's try to find some good news. All right, where's the silver lining on this? Where is the beacon of light in the midst of all this travesty I was talking about? Well, let's start off with the fact that Chamath, I can never say his name, but you guys don't talk about Chamath, billionaire investor, all in podcasts. Chamath, in this last episode, for the first time in almost a year, have I heard him sound constructive about this market. He seems to start to be feeling that we might be getting to a point where he's ready to start doing some buying. He's ready to really, for people to get back in. That to me is a very, very powerful sign. Because if Chamath feels this, and Chamath has a larger view or a bit more insight into what's going on with the economy than we do, all right? He's got feelers in way more places. He's more in touch with it. He's in that world. So again, I'm not saying just listen to Chamath, but it is a data point that we can use to understand where we are with everything. He's been negative for so long, and he's finally starting to sound positive. Okay, so that could be good news. What about earnings? Okay, like I said, just the fact that I think earnings may still be analyst expectations, despite the fact that they were 20,000 vehicles shy, that could still be positive, okay? That could be enough if nothing else gets said on the call. What else? Let's say Zach and Elon say that there actually isn't any issue, any demand problems in China. That the only reason that they went ahead and delivered less vehicles for Q3 was because they were just trying to stop this whole nonsense of a wave at the end of every quarter. And they said, well, we might as well do it now. We might as well do it now before we just keep getting bigger and bigger and bigger. We have to do it at some point, and the bigger we get, the harder it's going to be to actually do it. So let's start now, and let's just smooth this out. Let's not care about any end of quarter push. Let's just imagine there is no end of quarter, and it's just another day, and it's another day, and another day, and we just keep going. And maybe we only push at the end of the year, because that's the only number that really matters at the end of the day. Really, none of these numbers matter. What matters is just the overall, right? Over a 5-10 decade perspective, or a 10-year perspective, a decade perspective. Okay, so if they give us that type of signal, that could also be really bullish. Now, the next thing that could be bullish for us is we saw this investment upgrade. All right, this S&P investment grade upgrade. I can't speak today. To triple B. This was very weird in the timing of it. All right, so this came out of nowhere. We expected it in October, thanks to Alexandra Mers and Gary Black. They both have been predicting it, and a lot of the hard work that Alexandra made all this happen. But I believe everybody expected this to happen at the end of October, after the earnings results. So why is it happening now? And if you read what was actually in the note, and I highly recommend you, especially if you're an investor, go read it. It's very important, and it's very glowing on Tesla. But there's a lot of indications in this as if they have been talking with Tesla intimately, and a lot of the vocabulary they use seemed very similar to the vocabulary we tend to hear from Elon and Zach and Drew. So it just seemed a little strange. Okay, and then you couple that with the fact that Elon at the Tesla shareholder meeting brought up share buybacks out of nowhere. Why would he do that? Just out of nowhere, he brought it up. And don't forget, he said Moody's is irrelevant in this tweet. He didn't say S&P is irrelevant. So perhaps what's really happening here is that Tesla went ahead and wanted to apply for a loan, or I guess it's more for bonds with S&P. S&P was able to go in. They did their due diligence. They revamped everything, gave them the credit upgrade, and then now that Tesla's got these bonds that they'll issue, they'll use that to buy back stock. So there may be a buyback coming here. Again, Elon announced it during the shareholder meeting. S&P's all of a sudden updating it before earnings. What's the point of that? There's a lot of things that seem very interesting here. And on top of that, to add just a little cherry on top, if there's one person right now that really needs Tesla stock to go up, that's Mr. Elon Musk. So with this whole Twitter thing going on, it really seems like it would behoove him to have the stock price going up. So with that said, let's just talk about one last thing, Twitter. This Twitter nonsense, overhang, whatever you want to call it, I don't think you can ignore anymore that it is an overhang. All right, this whole week seems to have all these gyrations up and down, because it's one of those will they, won't they, will they, won't they. It's almost like watching Friends with Ross and Rachel, right? Will they, won't they? Or is it going to happen? Is it not going to happen? Is Elon trying to trick Twitter and get out of it? Or is Elon just genuine and Twitter's just being scared? Who knows? But what we do know is that we should get some resolution before October 28th. Before October 28th, we should know what's happening. Now, a lot will happen before then. We'll have CPI information, we'll have PCE information. We will have the earnings done. So a lot of things will happen. We'll know if we're going to get a buyback or not. If we get to the 28th and we have resolution and we know what's going to happen and we know whether or not Elon has to sell or not, or if he's already sold, which I think we would have known that by now, we can finally move past this. And I do think that this will give some relief to the stock itself. So anything that takes a little bit of air out of the world economy and all the stress we have going on, anything that could take a little bit air out of all the friction going on right now with Tesla and Twitter, anything that could alleviate the pressure, I think it could be a bright side for all of us, for Tesla investors. Again, I'm very hopeful that the Fed is going to U-turn before the end of the year, before FST beta goes wide release. I think that Elon and Tesla might be announcing a share buyback, which would be very bullish. Earnings should beat out. Hopefully, we don't see any China demand, and it was just them trying to literally flatten out the wave that they seem to have at the end of every quarter and what they've been hinting at us for a long, long time. And don't forget, this Twitter overhang. If we could get past this, perhaps that is enough of a beacon of a light for us to get out of all this kind of craziness and give us at least a higher level than where we are right now. Remember, at the end of the day, all this is going to be noise in the big scheme of things. 5 years from now, 10 years from now, 15 years from now, we'll look back as this was a very tough time period, but we'll be happy that we held for the long term. At least that's my thought. That's the mindset I'm in. None of this financial advice. But hey, if you enjoy this type of content, do me a favor. Hit the like button, hit the subscribe button, ring that bell. I love you all. Enjoy the rest of your weekend. Peace.